Okay, hi everybody. Welcome to the ABCs of VSA, becoming a regular weekly event for a new member of the team, Lauren Snedeker, who joined us a few months ago now and has been learning volume spread analysis really from the beginning, right? She's got no previous experience at all. Hello Fiona, by the way, good to see you. So Lauren's joined us with no previous training or trading experience or investing experience, and she's learning volume spread analysis from scratch. And I have to say, she's learning it very, very quickly and very, very well. During December, she'll be taking some live trades with our account. So I'm very confident that we're not going to lose too much money, I hope, Lauren. So always use a stop. That's what I'm going to say to you. But yeah, anyway, so we're going to be doing some live trading with Lauren during December. But running into that live trading event, what we wanted to do is pick some principles each week that are fairly obvious on the chart. And I'll tell you what, Lauren's put these charts herself, some absolute beauties, which are showing you how volume is definitely the footprint of the smart money. So without further ado, everyone, please give a warm welcome to Lauren Snedeker.
Hi everyone, thanks for joining today. I'm really excited to be here and doing my third webinar. Just like Gavin said, I really wanted to make sure that we took the concepts one at a time and little by little. I think from both my own learning experience and many of you that I've had the pleasure of speaking to, all of you have said it's easier when you take it a little bit at a time and not all at once, or taking in something with so much information because you end up with overload. So I'm going to start with, okay, so we're going to review. You're going to fill in the blank to the following sentences, and honestly, just go with your first answer. Don't second guess yourself. You're either absolutely right or you definitely need to review. No wishy-washies, all right? So you don't want to be confused. It's better if you can say that you don't know it and then you know that you can review it, okay? All right. Question number one. The most important component of understanding VSA is what? Oh, type it in. I'm sorry. I should say that. Let's see what you have to say. The most important component of understanding VSA is, Nick's got it, Bill's got it, Jasper's got it, KK, Randy. All right. Fred, yay, you got it. Okay, volume. Here we go. So it is absolutely the most critical component. It is our basically our footprint of the smart money, and it's the strongest indicator to future movement. Okay? And some of these reviews could be from webinars I've done, or these questions could be from your own learning through VSA, Trade Guider, not just necessarily through me. Okay, next question. In order to be in harmony with the smart money traders, you must be what with the herd or the uninformed traders? In order to be in harmony with the smart money traders, you must be what? Randy's got it. Jasper's got it. Stephen, you need to review. Jim, you need to review. All right, good. Contrarian or different from or against or opposite of. You basically want to trade in harmony with the smart money, but opposite or contrarian to the herd. The news, for example, will lead you in one direction, but the smart money is leading in a different direction. Okay? Don't be a sucker or part of the herd mentality when trading. Turn the news off and just look at the charts. Okay? Now, this one I find hilarious. Take a look at all three of these pictures. What do you notice about the pictures? Where is your eye drawn to? What do they all have in common? Bill's got it. Jasper's got it. Mike. Steve, you got it. Exactly. KK is absolutely right. Robert, nice job. Roland, good job. Okay, you guys ever watch Sesame Street? One of these kids is doing his own thing. And they stick out like a sore thumb. And it's true. You see this man or woman who's decorated in red roses, and then you see the little yellow chickie with all the black chickies, and then you see some poor person with a sore thumb. And if you could predict, what do you think I'm going with this? Why do we need to pay attention to something that sticks out like a sore thumb, something that's different, something that's odd? Good. Good. So it's the climactic action bar. This is ultra high volume. This is a picture of the Willis Tower, or the Sears Tower. It got renamed in Chicago, Willis Tower. It's that used to be the tallest building in the world. And this is the widespread price bar. Here's Yao Ming. He was the tallest basketball player just before he recently retired. Those are all the little people. Of course, they're not very little, but compared to him, they are. So this is something that sticks out like a sore thumb that you need to be drawn to, that you need to pay attention to. Okay? This is the bar you look for to begin a trade setup. This is the bar that will alert you to a price reversal. This is the bar that tells you the smart money has entered or left the game. All right, so what does this bar do? The climactic action bar signals, or signifies, I should say, movement, because the smart money has begun to force the price up or down. It signifies reversal. Reversal because it confirms a desire by the smart money to manipulate the current price action. It signifies momentum because when you see this bar, you know things are about to get interesting. I'm going to leave this up for a second. Go ahead and write this down. Movement, reversal, momentum. Momentum is a powerful word in football, and it is a dramatic effect that as soon as an interception or a turnover happens, if the home team, for example, is losing, and all of a sudden there is a reversal or a change, you can absolutely feel the momentum shift in the stadium. Steve, go Pats, absolutely. And all of a sudden, it really propels the other team. And it's been proven over and over again. So momentum is just as big in trading as it is in football. All right, we're going to analyze the charts, because really that's what you're here for. So first, I'm going to show, all right? I'm going to first explain how to analyze the chart, looking at the climactic action bar. Then I'm going to show you how to analyze the chart and look for a trade setup. And finally, you are going to do the same thing by yourself. Okay, so I'm going to show you, I'm going to do one, then you're going to do one. Okay, let's get started. Show and tell. Okay, the first thing that I'm noticing is a giant ultra high volume, skyscraper bar. It is exceptionally high, and you can tell it's the highest one across the entire volume, all right? You notice that basically I'm going to use my mouse here, okay? It's testing. It tests again here for the second time, and then it tests here for the third time. But notice that the volume goes down as it keeps testing. That's really important because it's the final test or no supply. It essentially means that the smart money has stopped buying or stopped accumulating. Okay, yeah, sorry, Jeff, you're right. This is the Apple weekly chart. I should have said that. Thank you. This is a clear indication, this last test right here, as the volume goes down and they keep testing, this is a clear indication of a bullish market or an up market. All right. Now, you notice after this, right here, right through here, you notice a healthy, not an ultra high, not a skyscraper, but you notice a healthy volume bar here. Okay. And the price starts to go up, and then it stops, and then literally it just goes up, 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 up. Okay. It's pushing away from the no supply bar, no supply, this low, right? It starts to go up and it starts to push away, 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 away from this bar back here. Okay, so again, we have our climactic action bar. We notice that it dips down into this area 1, 2, 3 times. Each time, number 2 and number 3, the volume gets lower and then really low. And then it comes back up on volume on this healthy movement right here, and away it goes. Okay? Now, people always ask, where are you supposed to put the, here's the low volume, and then here is where you would put where you would place your entry, okay? You would put your stop right below where you saw this large climactic, see? Right below you see this wide body bar. You put it right below that, and you come in. Now, safe traders, the safest place is to actually put it here. Okay, that's where Gavin went in. This is where you see green diamonds, and this is where you've been confirmed for your sign of strength. Okay? All right.
You might want to point out that aggressive traders go in on the third test. That's for aggressive traders.
Aggressive traders will go in onto this third test. They've seen the test. 1, 2, 3. They got proof that the volume has gone down. Again, they might put their stop volume right here to catch people, and then even if it dipped back down this one last time on the healthy bar where I showed you, they wouldn't have gotten stopped out because they put it right below this. It's a little risky because you still have this last bar right here. And who's to say that it wouldn't be a little bit lower, stop you out before it goes up again? Okay?
Steve says they're testing for sellers. Yeah, they're testing the supply.
Exactly. They're testing the supply. That's why it's so low. Okay? The low volume means that there is no supply left, and that's why it's the third and final test. Here, you notice, on the first green arrow, you notice that there's a lot of supply here. On the second time when they test, there's still a lot of supply, but it's lower than this. On the third test, there's almost nothing. Okay? Okay. All right. So, my turn. All right. First thing I'm looking at, and I hope you guys notice that there are no indicators on here and no trending diamonds. It's naked. So, the first thing I'm going to notice is this is, oh, yeah, sorry, I should tell you. This is the British pound, the currency futures. Okay? So the first thing is that you see an absolute ultra-high volume climactic action skyscraper bar right here. Woo! You can totally see it. All right, and now look what accompanies it. A very widespread down bar. Okay? It closes middle to high. This is a shakeout. It's literally violently shaking out anyone that tried to go short. Okay? And it basically is, I looked it up afterwards because I was looking at this chart and I was like, whoa, what is that? I looked it up, and this was the announcement that the UK banks were essentially going to endorse the QE3. They would pump more money into the UK economy, and the pound suffered initially as a result of that. So again, this bar is representative of basically good news, but bad for the smart money, right? So they put it down on good news, if that makes sense. People get all excited, oh good, they're going to pump more money in, but look how it reacts. It reacts opposite.
The pound actually got stronger where it should have got weaker on that news. It's going very opposite.
Okay, so now think about this. So now the pound has gotten stronger all the way up, when in reality it probably should have gotten weaker, right? If you're going to put, that's what inflation does. You put more money in the market, you know, you basically have inflated the value of the pound.
Why does it react opposite? Because the smart money are moving it.
It reacts opposite, ASIM, because basically the smart money is moving it opposite, okay? Now, interestingly enough, look at here. This is the highest volume you've seen since prior to this, not obviously a skyscraper, but it's the highest right here. And look what it corresponds to, a very widespread bar that pretty much is almost gapped up from this small one. You have narrow, narrow, narrow. It basically whips sideways. It goes up and kind of fails to go up. Then it pushes way, way up. There's nothing to the left that you can see. It's almost at a new high top. It goes one more time. But look, what we know here is the price goes up, but the volume goes down. We need another bar of confirmation, but you can bet that This will still kind of test a little bit, but expect some retracement. And then if you see one more no demand, it'll probably fail. Again, another way that you can see it is if the bar goes back down through this body of the bar. You place your stop right up above this, so you catch anyone, or right above here, so you catch anybody trying to go back up, going long, and it'll go down. All right? So here's another one. I called it spot on because it's essentially the exact same contract, but now this is the spot Forex market. Okay? So this is, again, the British pound, and here you notice on 10-7, you skyscraper bar, very ultra-high volume, and a very wide spread price bar. Okay? Goes down again on the news. All right? And now watch. It gets stronger and stronger and stronger. And then when it meets another high volume, not ultra high, but high volume, you're on another widespread bar. It's gone up again. Okay? It drifts down a little bit, but overall, ever since here, you're in an overall bullish market. And now look, in the exact same place, you have, once again, high volume, very widespread up bar. It goes up again, but the volume goes down a little bit. And now here we are waiting to see for a future retracement.
Steve makes a good point. He says, to do that high volume, wouldn't you need sellers in there too? Absolutely. See sellers and buyers.
Steve makes a good point. He asks, to get that very high volume, wouldn't you need big sellers initially in there too? Absolutely. Bill asks an excellent question. Where do you put your trade entry? So you're never going to put it on this climactic action bar, but what I use this bar for is where to put my stop. So I want to make sure in this potential area, especially if I couldn't see this yet, I wanted to wait for confirmation. This is a shakeout. This is so large and so dramatic that it's essentially reversed itself, okay? Again, that's one of the functions of a climactic action bar. So if you were to put your stop in at down here, then you know if they try and test one more time, you would stop yourself out. And by putting it in here in this large body, you're protecting yourself. And if you notice, it never goes back down there again. Now, obviously, it's easy to prove in hindsight that that was your violent shakeout. But at the same time, when you see this and nothing else has happened and you're on a large news day, here's your confirmation. And here's your